Today, as stocks came crashing lower, did the stock market just set a major trap? We come over here and look at the fear and greed index. Today, we're sitting at 35. The previous close was 36. So we can see a little bit of fear creeped in today. Now, before we talk about the trap, let's come over and take a look at the volatility index. We look at this on the 5-minute chart. The VIX was screaming on the way up. The VIX closing up more than 11% for the day. Now, what that indicates is either tomorrow or the following trading day is likely going to be an up day in the market. So if you're a bull in the market, this could be the buying opportunity that you're potentially looking for. Now, if we come over and look at how the indices fared across the board, the Dow was down 178 points. The NASDAQ was down 375 points. S&P 500 down 66.35 points. Russell 2000 being down 1.78. Now, when we come over and look at advancing issues versus declining, we had 70% of issues declining on the day. Then we come over and look at the sectors. The only two sectors in the green today was energy, followed by healthcare. Now, if we come over real quick and take a look at crude oil, yesterday crude oil had a huge selling tail on top of that candle. Now, with crude oil going up today, we're going to see, is this going to be an upper level consolidation, or do we start pulling back up? If crude oil is going to continue to rally up higher, the next stop for me would be about 75.77. However, I would much rather prefer see the market actually come back a little bit to about 71.47. Now we look at this article right here. Nvidia stock heads for the worst drop in months as the CES speech lacked one big thing. And what that one big thing was essentially he did not mention the next family chip for Nvidia. Now, who is the big winner out there with Nvidia coming crashing back down? If you said Micron, you'd be absolutely correct. In a down market, Micron was up 2.66%. And as we look at this on the daily chart, we can see we have one heck of a shooting star type of candle. And now we have a case where we have multiple gaps on the way up. But let's rewind and go back and look at Nvidia real quick. And this is what I'm talking about. Are people potentially trapped? There was a lot of optimism about the CES last night, hoping Nvidia was going to scream to new all-time highs. And look out here in pre-market. In pre-market, we saw Nvidia rocketing on the way up. Before the bell opened, Nvidia was trading as high as 153, almost 154, before coming crashing lower. Now, with that being the case, notice what Nvidia actually did today. Nvidia not only made a new all-time high, but then had a nasty bearish engulfing candle all the way back lower. Now, some of this is also due to the fact of the dollar rising once again. The dollar was up 37 cents, and it's not just the dollar index. We come over and look at the 10-year yield, still rocketing on the way up. And for the 10-year yield, we're still looking at that ABC projection up here at 5.03%. Now, with the dollar going up, yields going up, we take a look at Bitcoin, nasty bearish engulfing candle on the way down. And we really got to ask ourselves, is today part of a trap or not? Because as we come over and start looking, let's say the S&P 500, we can see the S&P nasty bearish engulfing candle. And if we were to draw a trend line basically connecting these recent swing highs right here, you can see we came right up to a declining trend line, rejected, and then boom, got the confirmation on the way back down. But hold up, it's not that simple. Because if we grab our Fibonacci retracement tool, we measure this last leg up from the swing low to the swing high. Notice where we've come down to. We've come down to 61.8. So is this going to be a case where the S&P actually makes a higher low? Or are we going to go down crushing that recent low that we had about a week ago? Let me know your thoughts in the comment section down below. As we talked about the dollar and the yields rising once again, and again, right here, inflation levels seem to be increasing. Businesses are worried about tariffs. And now what we actually heard today is now we are no longer pricing in another rate cut before July this year. And that goes against what a lot of people are thinking. They think Jay Powell's was going to land this soft landing. Well, you know what? That's simply not going to be the case. And look at these stocks out here. We look at the heat map. We had a sea of red across the board. There was essentially nowhere to hide. Jumping back over real quick and taking a look at the SPY. As we look on the daily chart, the MACD is starting to firm up here just a bit. On the 4-hour chart, we did get across to the MACD lines, now trying to roll over here just a bit. So it's going to be important. Do we set a higher low or not? You can see we close this gap right here, and we have a secondary gap that may be about to come back and get closed. You can see this morning we gapped up, boom, came right down, filling the gap. We actually filled two gaps, the gap from today and the gap from yesterday. We still have the gap left behind from Friday, but as we look at the 30-minute chart, notice the MACD indicator showing no signs of firming up yet, but we are below the zero line. So maybe we see the futures markets try to firm up a little bit tonight, and maybe we'll get a bounce out here with the S&P. Now, if we can stay above value area low tomorrow, which is essentially going to be the low from today, I'm looking for the market to bounce back up and potentially come up towards the first stop, about 590.95. Anything above that, we do have a huge minus development area up here that we set on the profile today. I'm going to go ahead and draw this out, and that's going to be somewhere in this zone up here, somewhere from about 594.61 up here to about 596.02. Now, if you trade with prop firms like Apex, My Fund of Futures, or Take Profit Trader, and you want a way to support the channel at no additional cost for yourself, make sure to use the links in the description box down below. Now, as we come over and we start looking at the futures markets real quick, now when we look at the 4-hour chart, what do we see? We have a big wick on this candle, and we were able to take out the point of control. That was one of the areas we're talking about today on the live stream. So if you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. But if we go ahead and we pull a fib retracement from the recent swing low to the recent swing high, if indeed this is going to hold, that would actually be constructive, and that can actually lead to the point that maybe, just maybe, this is going to be an ABC pattern on the way up. And if you notice, that would complete all the way up here at 6131.75. The bears would absolutely come unglued if that were to occur. Then we come over and look at the daily profiles. Now, during the live stream, we talked about S2 could be the next target once we had this lower level consolidation. I'm so glad I actually closed out the micro trades I was looking to DCA into early this afternoon. That ended up being a good call. Now, if we are going to bounce up, notice we have a couple minus development areas. The first one we're almost at 59 and a quarter, but also notice we're closing below value area low, which comes in at 59.65 and a half. The point of control will be up here at 59.76 and 3/4, with value area high being up here at 6,026.75. So as we're looking at this, we got to ask ourselves, was this sell-off today nothing more than a trap, and now we're going to bounce up? I am going to be looking to target value area low tonight, and if we breach that, I will be looking to push targets up here towards that point of control. Now, we come over and look at the NASDAQ real quick, and we can see this declining trend line we had yesterday. Yesterday, we basically had a spinning top type of candle of indecision. Then this morning, we gap up, closing with a nasty red candle, which ends up being a bearish engulfing candle right off that declining trend line. We also have the MACD indicator, not quite at the zero line, and we do have a bearish cross of the two lines. We look on the 4-hour chart, we see the MACD indicator does have a bullish cross, and we'll see if we start to come down a little bit lower, maybe into the gap from last Friday, does the MACD indicator set some type of MACD divergence play up? Out here on the 30-minute chart, similar to the S&P 500, notice the MACD indicator lines are below the zero line. However, they still have a very good separation. We need to see them start to flatten out and starting to firm up a bit, and then we'll see if we can start to get a lift back up. As we look over here, notice we're closing below value area low, so it's highly probable that tomorrow we'll come back, hit value area low, but the question is, will it be a case of where we come down and fill the gap from Friday first before making it up towards that price point? Next, we jump over and take a look at the futures markets. Notice out here on the NASDAQ real quick, we came all the way down, spiking through the 61.8 off of that retracement on the 4-hour chart. We made it. We tested out the point of control from last week. Now, if we really start getting above 477, then I'm going to be looking for higher prices to come. We can see the profile area this week is very thin up in this area, and that's going to be anywhere from 583 up here to about 651. Then as we dive down, start looking at the daily profiles, notice we are closing above value area low. This is going to be different than the S&P 500. Value area low coming in at 21,348 and a half. However, the point of control is right up here at 21,441 and a quarter. Value area high is way up here at 21,647.25. Now, I want to go ahead and clean off this chart real quick. Let's start from scratch. You can see right now we're kind of within this minus development area, so I'm not going to map that one out. But if we can clear above that point of control, the next target area would be within this minus development area above us, and that's really going to come in somewhere in the ballpark of 21,469 and a half up here to about 21,480. Now, if you guys like to learn how to trade Tom DeMark's 9-count sequence, make sure to watch this video right here.